Hello and welcome to IBTimes TV. I'm Leanna Brinders, Senior Business Journalist at the International Business Times. Joining me now is Stacey Golding. She's the co-founder and CEO of Premier Crew. Thanks for joining us, Stacey.
It's a pleasure. Thank you for having me.
So like fine art, fine wine has been seen as recessionary proof or inflationary proof. But how has that really fared since the onset of the credit crisis in 2007?
Well, the wine hasn't been recession-proof because the market had increased by exponential amounts. We were seeing 30 to 50% a year rises in the 5 years up to when Lehman's fell in 2008. That created some volatility in the market, which we haven't really seen before. But it is inflation-proof. Because wine is a luxury traded good, which is traded on a daily basis all over the world, and therefore in itself it is an inflation-proof product, so it will always keep up with inflation even if it rises high, which is obviously something that the government is expecting to happen over the next couple of years.
And maybe can you tell me a bit about how fine wine fares when it comes to market volatility? Because recently we did see a massive surge in prices.
Yes, it's, as I said, the volatility is unusual in the fine wine market, and it mainly was led by the Chinese buyers and the Asian buyers who have come into the market really since 2007, and they have pushed the prices up to levels that we've not previously seen. So when Lehman's fell and people needed to get their hands on money because all of their investments went crashing down in one go, the wine almost became a victim of its own success. It was still producing massive amounts of profit for people, so it was the first thing that got sold. Where we are now, however, is that sudden enthusiasm has tailed off. We are now left with a core buying market in Asia. The American market and the European market are coming back the way that they were. So what we believe we're going to be left with is a more traditional market where volatility is low, and therefore it makes for a good stable investment for new people coming in or existing investors topping up their existing sellers.
So maybe you can tell us a bit more about the market for those who aren't, I suppose, savvy in investing in fine wines. Like historically, how long has this market been going on for, and when has it really become seen as a true alternative investment market?
Well, the market itself is well over 300 years old. We can trace the quality and pricing of the top Bordeaux clarets back to 1755. Based on literally on the prices that they were sold at then. As an investment market, we were the first company, we've been set up for nearly 20 years now, who created a pure investment-led service for people to look at tailored investments into fine wine. We're not a fund. We have individual sellers, so wine is 100% ownership by our clients, and we tailor each portfolio according to investors' term, financial amounts and risk appetite.
Well, this all does sound great, but what are the risks when it comes to investing in fine wine?
Well, portfolio diversification we feel is ultimately very important, which is the main reason that we set up in the first place. It's a non-correlated market, so it generally marries very beautifully into most people's overall investment portfolios. As far as the investment returns and volatility is concerned, over a medium to long term, the returns average up to 14% or more in our experience with our clients, and any falls that happen in between are included in that, and therefore it is an amazing investment. But especially in the current market, even short-term investments, 3 to 5 years, will return a very good profit for people coming in now.
And what's the situation when it comes to taxation?
There isn't any. There's no capital gains tax for wine. Simply, it is a wasting asset, and you cannot make a capital gain on something that wastes away. There's also no income tax on wine. Although it's not an income-producing product, what we do for lots of our clients is we create an income by part selling their portfolios, but it's not subject to income tax. Effectively, you've just sold some privately owned wine. We also buy and sell the wine under bond, so there is no VAT and there is no duty, no tax to our clients at all.
When we talk to fund managers and portfolio managers about short, medium and long-term strategies, it would be great to hear what your top tips are when it comes to fine wine.
Yes, currently top tips are inexpensive wines. Our very top tip is a wine called Chateau Pontet Canet, the 2009. The 10 will also be very good. The 2009 has already made nearly 100% profit, and we expect the entry level now is somewhere between £1,700 and £2,000 a case, depending on where you buy it. And we expect over the next 4 to 5 years for that price to be somewhere in the region of £4,000 to £5,000 a case. The risk level in that particular wine is very low, so that is definitely a top tip. For medium and longer term investors, then we would also look at the more expensive wines, the ones that have been more volatile over the very recent past, but traditionally in the first growth wines such as Chateau Lafite, Chateau Mouton Rothschild, the biggest profit comes in those first growth wines. So it's about designing a balanced portfolio where we have a variety of wine to allow there to be some balance and some risk spread throughout the different types of wines that investors hold.
Well, that's fantastic. So if I was a prospective investor, how would I go about getting in on the market?
The investment process is quite straightforward. We choose, buy, store, manage, so we buy and sell where we feel the market is needed in between for our clients, and when we sell with no brokerage. We need to know from our clients their risk appetite, what term they are looking to invest. Although they are not fixed in, it's obviously a general guide for us so we know what vintages and what types of wine to buy them. And we then store all of that wine for them in their own name in optimum conditions in an underground store. The wine is not subject to exit fees, people aren't tied in. We tend to find that although investors often will come in for the shorter term, 3 to 5 years, because they're inexperienced, about 85% of our investors stay with us for an average of 7 to 10 because they're very happy with the portfolios that they've got.
Well, thank you very much for joining us. That was Stacey Golding, co-founder and CEO of Premier Cru.